The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the February 18th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs. These are words of wisdom brought to us by our extraordinary producer who makes everything we do here seem so seamless. And that is our man, Al. Al, thank you for this incantation. It goes like this. It says, watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become habits. Watch your habits, for they become your character. And watch your character, for it becomes your destiny. Let's go check out the destiny of the markets here right now. We've got the Dow trading off 38 points. It's trading out at 16,116. S&P 500 down 2 points, trading out at 1836. NASDAQ up 3 points, trading out at 4247. Russell 2000 up a couple of points, trading out at 1151. NDX 100 off about a point and a half. New York Stock Exchange is up 12 points. So market breadth here, not too shabby. Inside the New York Stock Exchange, 416. Net advancing issues. Our call-in number is 877. 927-6648. Give us a call. Be happy to take a look at your stock, your chart, your index, your commodity, your currency, whatever it is that you'd like to look at out here. Goldilocks up $4 right now. It's trading at $13.22. Silver up 32 cents, trading out at $21.74. Trying to take another run for the highs that were put in here recently at $21.97. Light sweet crude trading up 93 cents out at $101.23. Let's go see what we've got going on in the market. Let's go. We spent the first hour of the show taking a look at really the daily, the weekly, and the monthly charts. We didn't look at any intraday charts out there, so we're kind of doing this in reverse order. Let's go take a look at the intraday charts here. Let's specifically start off by taking a look at the NASDAQ futures. Now, I've got the Rhodes Momentum Indicator system up on my screen here as we speak right now. If you're watching us on Tiger TV, you can see what we are looking at. I'll describe to you for everybody listening on the radio or your mobile device at tfnn.mobi. We're looking at the 120-minute time frame here for the NASDAQ futures, the March contract out here. You see this little red zone. That's a little different than the red zone when you're playing NFL football out here. The red zone kind of says it's you're potentially, you got to understand how to utilize the system out here, but it is a potential sell signal. At this stage here, we don't have a sell signal on the 120-minute chart here yet inside the NASDAQ futures. Well, the NASDAQ being the kingpin out here, we want to be paying attention to it. Now, what you can see that did take place on the 120-minute chart, let me get my crosshair and the cursor out here. It makes it a little bit easier for us. 8 a.m. this morning, we got a nice little bullish engulfing candle. That very next trading session didn't really do too much to damage that session out here. So it says we should see some support down at the low of that trading session. On that 2-hour session, that is at 36.54 out there. We'll see if, in fact, that area even gets tested or not, or whether or not this was just some early morning jitters out here. But right now, inside the NASDAQ futures, which is been the strong index, has not yet given us the full-blown sell signal or anything out here. We've seen really a market that has just truly been consolidating sideways here ever since about 2 o'clock in the afternoon on, the good news is that was on February the 14th, so since about Friday, not much of a move up or down inside of the market. That's what's going on inside the NASDAQ futures contract. Let's go take a look at the Dow, the weaker link out here. Let's see what the message of the Dow is. Right now, Dow futures are off about 34 points. Let's see if they have actually confirmed a sell signal. In this case here, there we go. We'll switch over. This is a 2-hour chart we're looking at. So this chart here will not, or this candle session that we're working on, would not complete until the 12 noon time frame, so I could not get a signal. But at this stage here, we're just simply in the cautionary zone. That's the yellow zone. It just kind of flipped over to red here. We're just watching this live at this stage, but still not just a complete sell signal. We do want to watch for this little crossover. So at 12 noon, unfortunately, I won't be with you, but if we did see a crossover here, if this maintains its red color inside of the Rhodes Momentum Indicator, we're going to see a retracement, a deeper retracement inside of the market. Now, got this little hammer candle, and this is the swing point that we would be using. That's from 10 o'clock in the morning. That is on the trading session at February the 13th out there. I'll switch over to a different tool. In fact, I'll do that right now. We'll kind of flip back and forth and take a look at just normal retracement levels. Let me go to the 120-minute charts out here. Then we'll take a look at the indexes inside the marketplace and see what they're doing. But if we take a look at the Dow futures, and why do we use the futures out here? You know, we like to do, folks, we like to fill in that gap of time, that void of time out there. And that's one of the things that the futures contracts really allow us to do. So we're going to use that swing point right here. This is 10 a.m., and we're going to go from that swing point low. That was on February 13th. We're going to go from that low to the high out here, that little shooting starish type candle from 4 a.m. that took place out here on February 17th. So that was 4 o'clock this morning. Today's the 18th. That was 4 o'clock yesterday morning, I should say. I'll get it straight out here. We take a look at the 0.618 retracement. Heck, that's all the way down at 15,962 out there. The dead cat bounce, which we have not seen the Dow get down to, would be 16,049. That would be normal. So it would be no problems here inside of the Dow. So far, although a little bit of damage in the price damage in the market, nothing really big, no big sell signals or anything as of yet out here. Let's take a look at the ES Mini. We'll flip back over and take a look at the ES Mini on the 120-minute chart. We can do that on both type of charting tools out here. Let's take a look at the ES Mini Rhodes Momentum Indicator signals out here. The Dow did break through a little support level of that bullish engulfing candle, but still not too bad. In the case of the ES Mini, it too, just in the cautionary zone. It's got the bullish engulfing candle. Of course, they all did. That took place here at 8 o'clock this morning. So low, a level of support right now that we're watching is 1832.25. A break of that session. Let's go see where price would likely head back to as we take a look at the ES Mini. So let's go do that right now. ES Mini here trading out at 1833.25. Let me get the proper swing points here. It'll make it a little bit easier to actually do this. We're going to come back to 10 a.m. on February 13th as well, so we'll use that same session. We're going to go from that low to the high out here at 8 a.m. yesterday morning on February the 17th, and that's out at 1840.25. The dead cat bounce, which it's not even near, which would be 1825.73. That would be a level of support that I would be looking at. Let's also extend this little rising price channel that it is traveling within. So give me a moment here to extend that. I'm at the wrong thing. I don't want the, let me see here. Where can I get on this? There we go. Let's extend that up. Let's multiply that. There we go. So now we're taking a look at a little rising price channel. It's a 120-minute chart that we're looking at on my screen here. And if you come off of the trading sessions right here, we're using price channels. That means we're using an open or a close, a body of the candle session out here, co-located. I mean, it doesn't matter whether it's an open or a close. So you're looking at the open session, 10 a.m., February the 5th out there. That open was 1738.75. The open of the close of the session here from 2 a.m. on February 6th, and that's out at 1745.75. You can use the open of the session from 10 a.m. on February 6th out there. So you got a nice little bottom with regard to our rising price channel. 1814 is also another key level of support out here, but the one that you really want to be paying attention to is this rising price channel. In fact, your next buying opportunity inside the ES Mini could, in fact, come at the bottom of this rising price channel. If you can see some now, you can hit this rising price channel two ways, either by pushing lower or by trading sideways out here. We'll see what happens when that occurs out. That's a mini that we are taking a look at. Now, let's go switch over and take a look at the indexes, see what we've got out here. Let's start off. Let's take a look at the NDX 100. Right now, it's trading out at 36.67.35 out here. If you take the swing point high, that recent one from January 22nd, Price level 36.3465 down to the low that was established here on February 5th. You'll see that the 1.272 expansion would take you up to 36.9334 out there. That is where I suspect we will see price head to. You're at 36.67. If we take a look at A to B equals CD patterns out here, here's your 100% move of, well, here's your consolidation low, that December 18th level that held. So we can't use that as a A point. You've got to come all the way back down here to November 7th as your A point for the NDX 100. So if we use that as our potential A point of an A to B equals CD up, that's our A. I would go ahead and use this January 22nd level. Is that where we get the lower low out here? Yeah, I would use that January 22nd level out here as my B point, and that C point right here that came in on February 5th. You will see that your 1-to-1 A to B equals CD takes you to 37.35 out there. So if 36.93 doesn't hold, you'll see price inside the NDX 100 try to make its way to 37.35 to 37.68 type range out there. But one moment at a time, one day at a time out here. But those are the price projections for the NDX 100. Let's go take a look at the Dow out here. The Dow right now trading off a bit. It's down about 32 points. Really not that big of a deal out here. The Dow is, what the Dow is doing, it's struggling against these little downdraft sessions out here from February or January 24th, from January 23rd out here, unless the Dow starts to really reverse its gains. If you take a look at the candle session here from February the 12th, you can see right now those two candles, those two little spinning top-type candles look very similar. Of course, we have a lot of time left in today's trading session, but the Dow is signaling to us, see how it it did it. See how the Dow was able to, on Friday, was able to move through the 0.618 retracement level with a relatively wide-ranging bar out here. On a scale of 1 to 10, this probably classifies as about with 1 being the strongest, this probably classifies itself as about a 2.5 on that Richter scale. So that's a strong session. Says 16,268 is its next target out there. But I believe if it's going to move to 16,268, it's going to go test the swing point from January 21st, and that low would be 16,316 out there. So that's what's going on inside of the Dow on a daily chart. If we take a look at the S&P 500, S&P 500 right now on Friday as well as today so far is testing the January 15th swing point out here. That's its swing point high, excuse me, which is out at 18. Well, it's its swing point high out here. That's the high of the S&P when it made the price level of 1850.84. Now, the low of that swing point, that's what it's testing right now, is the 1840.52. You're at 1838.19. You came into it on Friday with, do I have the volume out here? I don't have the volume on the S&P. I take that back. And what the S&P is trying to do is trying to make its way up and test that high at 1850.84. There's no A to B pattern on this move up off of the bottom. It's just pretty much been a straight line move to the upside. That is on the S&P 500. Let's take a look here at we'll take a look at it when we get back from the break. We'll take a look at the Russell 2000, which on Thursday joined the game. Nice wide-ranging bar out here, slicing through that 0.618 level like sweet Kerrygold butter. We'll be right back, folks.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went to break, I had popped open the chart for the Russell 2000. It's trading out at 1153.78. That had been the weak link in the marketplace. That is not the case at the moment. In fact, right now it is the it's leading with the Nasdaq Composite. So you've got the Nasdaq Composite up 0.4. You've got the Russell 2000 up 0.4 of a point. You've got the New York Stock Exchange up, only 0.2 of a point as we speak here right now. But the Russell 2000, the little engine that couldn't, is the little engine that will. It is trying to make its way up to 1160.78. Of course, the waterfall cascade began here on the trading session of January 24th. That high at 1164.77 out here. So its target is right around the 1161 to 1164 type range inside of the market. Now, if you take a look at the patterns, if you're watching us on Tiger TV, you can see 2-3 drive to a top patterns. We're going to get rid of the first one because it failed. That's the light blue one. So let me try. If I erase it, I can just redraw it, right? Not a big deal. Which one do you think it is? Is it probably this one right here that I delete? Hey, how about that? There we go. So there's our 3 drive to a top pattern here. That worked, and price did what it was supposed to do, which was come all the way back down to the bottom of that December 12th area. That was the low as it was making its second drive out there. So it accomplished its task. At least it's one primary task out here. Now, oftentimes these are very significant reversal patterns out here inside of the marketplace. So The Russell 2000 is still one of those indexes that, in fact, still could be making an A to B equals CD down. If it gets past the 1161 mark, then that pretty much erases that as an option. Now, I say that because the S&P 500, the best it could be doing now would be in a consolidation pattern. It is already above the 0.618 or the 786 retracement level, so it could be consolidating out here. The NASDAQ Composite, that without question, or the NDX 100, that's what it was already communicating to us that it was doing, which was consolidating, because that December 18th Ben Bernanke day out here was not able to bust through those lows. So, of course, it's doing more than a consolidation. As we know right now, it's doing an expansion of its last set of swing points. The Russell 2000, we got the S&P, the NASDAQ. I don't recall if I did the Dow. Yeah, I did the Dow out there. So I think I've covered the indexes for us. Let's take a look at the New York Stock Exchange, though. I did not hit the New York Stock Exchange. So let's go see what message behind this. No, did I? Yeah, there we go. So if we take a look at the New York Stock Exchange, it's trading out at 10,305.67. It, too, now this is the wider swath of the marketplace out here, it, too, is above the 0.786. The New York Stock Exchange is saying, hey, best case would be consolidation pattern out here. Best worst case would be a consolidation pattern right here, because New York Stock Exchange is not making an A to B equals CD down. Price has already gotten above the 0.786 retracement level out here. So an A to B, quite frankly, an A to B equals CD down just takes price back all the way down to the swing point low here from February the 3rd out at 97.32. Right now above the 0.786 retracement. I really believe it's the New York Stock Exchange that probably gives us the message of the next move, whatever that is, inside of the marketplace out here. And that is because, well, let's go ahead and pull this back here. Let's go take a look at it for really a number of reasons out here. Number one, let me switch over to, let's do this. Let me switch over to this chart because I don't want to screw up some of my notations on that chart. And occasionally that happens, and then that makes my life a little bit miserable for a few moments of time, and I hate to do that. Let's take a look at the weekly chart here for the New York Stock Exchange. So the weekly chart here for the New York Stock Exchange, the swing point high, this way I can back it up a little bit easier. It's easier for you to take a look at. The New York Stock Exchange, the actual swing point high here, so this is the one index that has not made it over its highs out here, and it's the wider swath of the marketplace. So here's where we're going to get a ton of information, and that is on October the 12th, 2007. The high there is 10,387. That level was hit. We saw a slight close. I don't think on a weekly basis we saw a close above it. Let me pull this back. So 10,387.17. That's the number you want to write down on a pad of paper out here. No, we did not see a close above that on a weekly chart. And so that has acted as resistance. So price gets up there, it backs off, it makes this little hammer candle here on the week of February 7th out here. You know, that's about as bull. That's one session reversal pattern out there. You could follow through here last week clearly. So now what the New York Stock Exchange is going to do is take another run for 10,387. That's another 82 points, 81 points higher than where we're trading at right now. If it can get over that, let me try and see if I've got the monthly chart out here. Let's take a look at the monthly chart just to kind of put things in perspective. Here's the monthly chart for the New York Stock Exchange. I'll pull this down here. And the New York Stock Exchange, just to kind of give you a feel for what it had done out here, there's a monthly chart that we're looking at. This takes you back as well, back into 1997. Oh, I'm just going to have to leave it there. Sorry, folks. I'm just kidding. When we get back from this breakout here, we're going to go take a look at the monthly chart for the New York Stock Exchange. We're going to go take a look at its consolidation patterns that it's trading in and just why getting over those 2007 highs is so important. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is off 5 points right now. S&P is up a full point. So before we went to break, I was trying to pop up the New York Stock Exchange. So we're going to take a look at that because it really helps us to gauge what the markets are doing. It's got great patterns out here, so ones that we want to be paying attention to. Again, the wider swath of the market. So if we understand what's going on in the New York Stock Exchange, it'll help us to get a better idea as to what really is going on inside the overall marketplace. Now, it's a monthly chart that we're looking at on my screen out here. And if you go back, this chart here, I'm taking you back really where the boxes are drawn. We're looking at a couple of boxes drawn out here. We're looking at the red box. That's taking us from back in 1997, January 1997, out in the price level right around the 4,400 mark inside the New York Stock Exchange. Price goes from 4,400 up to a high that was formed back in 2000, September of 2000. Gets up to 71.64, makes a move all the way back down to the bottom of July, in July of 2002, out at 45.40, and actually makes a low right here at 44.18, March 31st, 2003. Now, What was it doing then? Just like as we take a look at gold on a daily chart, we're taking a look at the New York Stock Exchange here on a monthly chart, it was consolidating, right? It went from the low up to this high, back down to the low that held up here. And then what happened is back here in December of 2004, really took place here in June of 2005, but December of 2004 was giving us the first message that it was going to go ahead and crack and break through that consolidation level. What it did for a period of 6 months or so, we just simply moved sideways out here. We never really got a bearish reversal signal. You had to stitch together 2 months, which was March and April in 2005 out here. Well, what happens in June of 2005, July of 2005, you get a clear break of this consolidation. Just like in silver, which has formed its measured move. Remember, the measured move is equal to or greater than a consolidation. What does the New York Stock Exchange do? Well, in the yellow box here is what I want you to pay attention to. It makes its measured move equal to or greater than. It takes all the way until May of 2007 in order for it to make its measured move. What happens? May of 2007, price pulls back a little bit. Price goes higher than into the October time frame. What does it create there? It creates a price relative strength divergence pattern. That means it makes a higher high with less relative strength than after it completed the consolidation. You then get that little bearish reversal signal in November of 2007. You get a confirmed pattern that following month in December 2007. And then what happens? Price makes it all the way back down to the bottom of the original consolidation. And, of course, once it got inside that consolidation level, which it did right back here, in the during the financial crisis out there, I see Barney Frank, one of the contributors to that crisis. Of course, he would deny that, but I won't say liar, liar, pants on fire. But as price moved down into that level, October of 2008 out there, once you get back into a consolidation pattern, then you're going to go back down to the bottom. That's why I say in silver's case here, you don't want to see, you want to see silver retrace or back off, if it will, and go test the consolidation. You don't want to see it necessarily get back inside there. So now what we have set up here inside the New York Stock Exchange is a larger consolidation pattern, because in essence we can make the statement, the true statement, that since 2002 the New York Stock Exchange has been consolidating between, we'll just call it the 4,400 level to the highs here in 2007, we'll call it 10,400. So it's a 6,000 point consolidation. That's right. That says if the New York Stock Exchange is able to take out the highs, if it can do that, 10,387, then over time, you're going to see a New York Stock Exchange up at about the 16,400 level. And that's why paying attention to the New York Stock Exchange is very, very important. Now, last month was a bearish reversal signal. You had a bear sash candle out there, stronger than a bearish engulfing candle session that we're taking a look at. But this month here, that is failing. Now we've got 9 trading sessions left here, so we'll see. But in order for the bears to truly assemble any kind of a march here on the bulls, they are going to need to get at least back below, and this is going to be important. I am looking at, you should be looking at it as well, 10,173.77. That's the mark. If, in fact, the bears are able to mount a charge going into the end of this month and in the New York Stock Exchange closes back below 10,173.77, then that bear sash candle, from my line of work, is still in place out here. So that's why this is so important to watch. Now, one of the reasons that I became so cautious and was asking folks to, hey, take your money off the sideline, wait for the market to prove itself to you, give yourself that last 25 points. We're just looking at the S&P 500 because folks can, gauge their market. Many folks are making trading decisions just based on the S&P 500 in their 401k accounts. Now, I'm taking you back here into 2007. In 2007 out here, this is a weekly chart that we're looking at. Here we've got that same price relative strength divergent pattern here that formed. You had a bearish engulfing evening star pattern that occurred. That's the week of October 9th. 19th, 2007. We had one, and then you had price move down to lows out here in August of January 2008 out here. It got down and tested the 200-period exponential moving average twice. It did that again back in March of 2008. It formed a little Gartley buy pattern out here on the daily chart back in May of 2008. Then it gave it up in, as Tom likes to say, gave it up in spades. And that's what I was looking for. So you got this price relative strength divergence, but this is 2007. Let's fast forward to where we're at today out here, and we have that same pattern. And quite frankly, it was confirmed out here the week of January 24th, 2014. Getting above these patterns is very important. So if in fact on a weekly chart, if in fact on a daily, if in fact on the monthly, you see a break above the 2007 highs inside the New York Stock Exchange, that would be extremely bullish. Likewise, if it can't bust it out, what happens? It tries to bust them down. Let's go to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding. How are you today? How was your weekend?
Good morning, Steve. Had a great weekend. Took my grandson to Cape Canaveral.
Oh, that's great. So now what's the tour like out there with the space shuttle being gone? Did you go on that bus tour or just to the KSC
we did
center?
the bus tour thing as well.
Okay.
But it's worth it. It's $50 a piece to get into the place or more. But it was worth it. It was a little bit questionable when we first started, but as we got into it and we've seen several of the different exhibits and the stuff, the interactive stuff, it turned out to be a pretty good day.
Okay. Now, do they take you through the vehicle assembly building by any chance?
Not this time. In fact, this coming weekend will be the last weekend they'll be able to give tours of that at all.
Oh, really?
Yeah.
What was the reasoning that they gave to that? Did they?
They have turned it over to some. I guess it's Boeing or one of those outfits is doing some of the new private enterprise stuff out there.
Okay.
Like SpaceX, and I think there's another one out there.
Yeah. A lot of folks don't realize that building is so tall that when they first built it, they struggled because there would be clouds that would form up at the top of the building.
That's right.
So it'd actually get rain inside there. So, that's one of those things that you don't really think about.
But we had a good day. Thank you for asking about it.
Yeah, no problem. You want to take a look at the RSP, which is the Guggenheim Equal Weight ETF out there. So how can I assist you here?
I don't have this, and I'm not even intending on buying it or anything, but it seems like a significant thing that's happened here today and maybe Friday as well.
Yeah.
It's actually poked its head up above its year to date, or even over a year. A long time. No. It's at a high.
Yeah, no, hey, look, that's you're absolutely correct, folks. And Don, very astute trader out there, knowledgeable about the marketplace. He's taking a look at the equal weighted S&P 500 ETF. Now, as Don was saying, it's not it's relatively liquid. I mean, 600, 700, 800,000 shares out there, and a lot of times folks don't really pay attention to it. But I know that one of the reasons that Don would be looking at it is the S&P 500 is a weighted index, just like the NDX as well. In fact, the NDX 100, it's the QQEW, is the equal weight. And we'll take a look at both, Don, if you don't mind, while you're on the phone here.
Absolutely.
And because I think the QQEW first went ahead and actually went ahead and poked its head above the support or the resistance level. Now, the equal weighted, folks, it should be a little bit more difficult for the equal weighted S&P 500 to break a resistance level. And what Don's looking at is that January 22nd high out there, which is at 71.45. You're at 71.53 right now. So you're absolutely right out here in that it shows you how strong, actually, the underlying market is. And here's where, taking a look at the market, there are a number of different indicators that obviously we can use. And this is certainly an excellent indicator to gauge the health of the market. In fact, what I like to do is I like to be taking a look at this side by side with regard to the S&P 500. That's a chart that I have up on my screen here right now. Now it shows as lines down below. The RSP is actually is what I've got at below here. I'm going to see if I can switch that to candles. Of course, I know I can. There we go. And what I look for divergences. Now, what's interesting here about the S&P 500 is the weighted index, right, has not been able to poke its head above. So how do you view that divergence?
You're asking me the question?
I am, because were you asking me the question?
Honestly, I place more significance on the equal weighted than I do on the weighted.
Yeah, I've got to go back. It's been a while since I looked at it. I used to have divergent patterns that were drawn out here. They don't happen too often. And, and it usually was the divergence where the equal weighted was telling you the different story. So in this case here, the equal weight, my recollection is that the equal weighted, when the equal weighted was not making a higher high, but the weighted index that divergence was something to be paying attention to.
That's right.
So,
that's right.
Yeah, so I'm going to have to go back and I'll do some homework and see if I can find instances where the equal weighted was making higher highs, but the weighted index was not. I don't know.
Price does take precedence on the overall market as far as I'm concerned.
Yeah,
The final say is the actual S&P.
Yes. Now, to your point in paying attention to it, and thanks for bringing that really to the attention of everyone out here.
Well, the one thing that did concern me about the RSP is that let me get it back.
Yeah.
The downswing on what day was that? Come on, it's got to come up here. Here it is. We had very high volume on the little bottom that it put in on the 27th of January, and it has not gone back up on that amount of volume. So that's the only divergence that would concern me about that.
So you're looking at January 27th here. Give me a moment to find that. Okay. So you had 5 million shares.
Very high volume. My tip-off for this week would be if we close below last week's close, and then we'd have a failure, and that would be really significant. The market's going to crash.
Well, I don't know about crash, but okay.
Those are my words.
Yes. I think this is one place to look at. I think for me, the NASDAQ composite actually is really important because of being able to take out its highs this week. So that to me, that's an area. But I was just going to, because you brought up the equal weighted ETFs, and we don't spend much time on it. In fact, really relatively little time. So that's my doing out here. And if we take a look at the QQEW, the equal weighted, this was able to get up over its highs on February 11th. I'm just curious what the Qs actually...
It had higher volume as well, too, so that's another...
Yeah, and the Qs here, they broke through there on the 13th. So the tip-off here was certainly that the equal weighted index was making higher highs, was breaking its highs before the actual weighted index was out there. So... Good find.
Anyway, it's something to pay attention to. And as far as the crash goes, with my little bitty account, anything that goes down is a crash.
Okay. All right. That sounds great.
Anyway,
hey,
thank you.
You bet. Thanks so much for calling and bringing that to our attention.
Bye-bye.
That was Don in Odessa, Florida, folks. And, as long as he brought it up, it's a great piece of information to you. Go pay attention to the QQEW as well. That's the equal weight for the Qs out there. Like I said, I used to do a bunch of work with them, and off the top of my head, my recollection was that when the equal weight was not confirming what we saw in the weighted index, now we needed to wait for reversal sessions. It looks like the last time I had a notation on the QQEW, the equal weight, was back in October of 2013. And you look for, divergent patterns are warning signs out there. Oftentimes you can't use the divergent patterns as timing tools out there, but it is really good to be paying attention to. So that was on the RSP, which is the Guggenheim S&P 500. The QQEW is the First Trust NASDAQ 100 equal weighted. And these are ETFs that, quite frankly, you can play out there. So the QQEW has got plenty of, I won't say plenty of volume. Trades, 300, 600,000 shares out there. Let's go take a look here at, what do we want to look at that is important? Let's take a look at some stocks here that are popping and dropping. So I think hopefully I covered the New York Stock Exchange for you well enough to understand that is important for us to pay attention to. One other thing out here, I'll go back and take a look at the daily chart here for the New York Stock Exchange. So give me a moment to pull that up, and then we'll just finish that off. Then we'll take a look at a couple of stocks popping and dropping, like Kansas City Southern, that's leading the charge to the downside here this morning. If we take a look at the summation index, that is pointed higher. The price oscillator, the McClellan price oscillator, it's up in the bought condition, but it's also up at levels where the end of a market, or the so-called crash that Don was talking about, is not likely to happen. But we'll see. 877-927-6648. Remember, Don's crash was just a move downward. We'll be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off 19 points. S&P is up 1. Composite up 24 points. Russell 2000 leading the charge. The upside up 7.5 points. I'll give you one piece of one little hidden gem out there today. What you want to be watching for on the New York Stock Exchange. Don't want to overhype this or what have you, but right now as we speak, we've got 744 net advancing issues out there. So I don't know, about 1.5 or more to a little bit more than 1.5, 1 3/4 to 1 advancers outpacing decliners out there. What you don't want to see take place today, the number you want to write down on a pad of paper is 739. If the New York Stock Exchange moves higher today than Friday, obviously, and it does it on less than 739 net advancing issues, that's going to be a little bit of a warning sign, and we'll want to be paying close attention to that in the upcoming days out there. So that's just a little hidden gem, much like with Don sharing with us the RSP, the equal-weighted ETF for the S&P 500 out there. Now, let's take a look here. We've got gold is trading up. Where did it go? Gold is trading up $4. Silver is trading up 37 cents out there. And as we take a look here at the mining equities, I'm going to do that. We're going to use the Rhodes Momentum Market Analyzer system. Now, I've built a tool here that I use for my clients and subscribers. They know each morning for every time frame, 30-minute, when I mean every time frame, 30-minute, 60-minute, 120-minute. And it covers it covers the common currency pairs. It covers the common commodities, gold, silver, oil, natural gas, bonds. The bonds are part of the currency equation. It covers the futures contracts, what's going on. It covers, at the end of the day, as of Friday, at the end of each trading session, each index ETF. Each sector within inside the S&P 500, and it helps you understand the trend. And the trend is your friend. And so in one quick look at a page, if you are trading and you're on the wrong side of the trade, you're going to be able to go take a look at different time frames to understand, hey, maybe I should be in this trade or maybe I shouldn't be in this trade here. If we take a look at the GDX, now this covers all of the GDX holdings that I get data. That means I'm missing about eight instruments. I'm not getting the data feed from Canada. I'm not getting the data feed from Egypt and one or two others out here. But this covers the Lion's Den. Now, what we're taking a look here is the daily. If you look at I've got this blown up on my chart. Hopefully you can read it. I know you can inside the Tiger's Den. So you've got the daily is the first time frame that we're looking at out here. And then the daily time frame inside of the GDX, that would cover the nugget. That would cover the if you're on the opposite side of the trade there, the dust out here, everything on a daily trend is in bullish mode. And in fact, even on a 120-minute chart, the only thing that we have going on here is maybe a little bit of retracement in some equities, like ABX and AEM is just beginning to retrace a little bit. Orico Gold, AUQ, Yamana Gold, AUY is just beginning to pull back. But it is still in bullish mode across the board out here. Now, that doesn't mean that you shouldn't tighten up your stops and so forth, but this is still showing nice, strong trends out here. And the reason why I use that 120-minute time frame, which I believe is key to us, is, impacting a daily time frame. When I take a look at a daily to a weekly, you're increasing it by, 5 trading sessions. So on a 120-minute chart, if I were to increase it by, in essence, 4 trading sessions, I've almost got a full trading day in there. So, so I like to use the 100, because if we're going to see changes in trend begin to take place, we're first going to see them you would first see them obviously on a shorter time frame, so you can see them on a 30 and then a 60. But I think that 120-minute with regard to understanding that daily time frame is really, really good. Folks, thanks so much for being here on Terrific Tuesday. Stay tuned. Our man Basil Chapman is up next. After Basil, we've got the Options Hour. Then we go to Daryl Martin, David White. Tuesday, we got Andy Hecht and the Tom O'Brien Show from 4 to 6. Have a great Tuesday, folks. Look forward to speaking to you soon. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.